So I think if I start with the use of artificial intelligence, what we find is that there is a very, I would say, huge opportunity for use of artificial intelligence in two particular areas when it comes to lending. The first is clearly in automation of tasks, right? Automating regular tasks, etc. Things like doing OCR or KYC and all of those things. So that's one opportunity. And the second opportunity is in terms of decision making, which is basically where you start basically looking at a lot of data information about users, their past performance on various things and so on and so forth, to determine whether they are credit worthy or a loan should be given to them or not. To my mind, this second thing where you are using artificial intelligence for decision making is very, very crucial. It's very important, and that's where the largest opportunity is, because largely what we find even today in India is that a lot of decision making is still manual, even though document collection, information collection is become automated to a great extent. If I just give a context from what we do, so as an example, we use, since a lot of our customers don't have any credit history, there's not enough information available about them to make decisions. Therefore, we rely on collecting information during the part of the loan journey. So one of the things that we do is psychometric assessment on users, where we basically ask our users to go through a psychometric test as part of the digital loan journey. And all the information that we collect is then analyzed through artificial intelligence algorithms to come out with a decision of whether we want to lend to them or not. Similarly, we use artificial intelligence for face matching, for video matching, for voice matching of customers to establish identity and to do any fraud checks on them. RevFin as a entity is very clear that we are going to lend to people who are financially excluded. So a typical customer, in fact, 85% of our customers have no credit history, no credit scores, never taken a loan in the past. 97% of our customers live in tier 2, tier 3 towns. Most of our customers have very low level of education. They don't have any formal sources of income, and they have no banking transactions, right? So to make a lending decision for such a group of customers digitally is very difficult. So what RevFin has done is we've created a very unique and innovative technique to make decisions on these individuals. The first I've already mentioned, use of psychometrics. So basically what a psychometric test does is it understands personality traits that have a direct correlation with intention to repay. So we're able to collect certain information about users as part of the loan journey, which helps us identify personality traits. And then we use those traits to understand which customer has the intention to pay back on their loan and which doesn't. So that's one. The second thing we've done is we've created a very good biometric tool as well, where we look at, we capture videos and voice of customers. We do face matching using that with government issued ID cards. We do voice matching on them to establish liveness as well as identity, and so on and so forth. Then the third thing we've built is we built a gamification tool which helps in improving digital collections, which basically means that we incentivize customers for paying on time through digital or banking channels. Because a lot of our customers live in a cash-based or work in a cash-based economy, this is a very powerful tool to convert them into digital economy. And the fourth thing, since we are doing a lot of lending in the electric vehicle space, we have embedded telematics and IoT-based technology in all the vehicles that we finance. This helps us capture real-time data on driver behavior and driver performance, and vehicle behavior and vehicle performance. And that really helps us in understanding a lot of things, right? So it helps us in understanding how drivers are performing vis-a-vis each other, how they are performing in different geographies, which brands of vehicles, which brands of batteries are performing well, etc., which are not, what is the range of various vehicles, etc. And then that basically all feeds back into our lending decision. As I said, that the loans that we give out are for commercial electric vehicles, which means that the individuals are using the loans to buy a vehicle, which becomes their main source of income. So the loan is actually enabling income generation. Now, what we find, especially in small towns, is the electric vehicles, especially electric three-wheelers, are able to substantially increase the income of the drivers by 2 to 3 times, on average 2.5 times. This means that the ability to repay also goes up significantly. Also, the till the time they have the vehicle, they're able to earn that kind of income. So I would say that there is the cost of not repaying is basically uh, that they would end up losing their vehicle at some stage if they continue to not pay, which means they basically lose their source of income unless they find a better source of livelihood or income generation. But until such time that the vehicle is earning good money for them, they don't default. We have a very low incidence of default on our portfolio, which is under 1%, even for the kind of population we're lending to. So I think for me, I'm a former banker, and I was very clear that when I wanted to set up my entrepreneurial venture, that I'm going to focus on financially excluded individuals. Why? Because there's a huge opportunity over there. In fact, 60-70% of adults in India do not have access to formal and affordable lending, right? And that, in my opinion, is a huge opportunity. Um, Now, when we looked at people who are financially excluded, of course, there can be a lot of different reasons why people may want loans. So we actually tried out a lot of different segments when we started, but we decided that we want to focus on electric vehicles for three reasons. One is that electric vehicle, um, we started about 3.5-4 years back, so we could see a huge potential to scale electric vehicles, which wasn't quite apparent back then, but today that's become quite apparent, right? So there was a huge opportunity to scale this segment. The second was that when we looked at the customer segment, they were exactly the kind of customer segments we wanted to focus on, right? Which is basically people who were financially excluded, who needed the money to set up some income generating opportunity, so the loans were for productive use. And that reduces the risk of lending significantly because the livelihood depends on the asset that is financed. Also, when we looked at these customers living in small towns, tier 2, tier 3 towns, there was not much of migration risk because most of the people belong to those geographies. And the kind of income that people were able to earn with these vehicles, as I explained, was about 2 to 3 times of what they were earning. There was a social upliftment for them as well. Which means that there was they were earning more, they were better accepted in the society, and they became local community heroes, right? So that was the second reason why we decided to focus in this space. And finally, what we found was that electric vehicles, because it's a new concept, very few lenders were operating in this space, and that gave us an opportunity to basically get into the market, capture a huge chunk of the market, and also help shape the market and its future, which is what we've been able to do. So those are the reasons why we entered this segment. Well, in terms of the business model itself, what we do is we do partnerships with manufacturers of electric vehicles, with dealerships of electric vehicles, with fleet operators, with e-commerce companies who operate electric vehicle fleets. And then through them, we give loans to individuals who either come into their dealerships or who want to operate on their platform, right? So we basically give loans directly to individuals through those partnerships. In terms of business achievements, so I'll just give you some numbers. So our monthly disbursements in the last 6 months have grown 7 times. So just after, so prior to COVID, the first COVID wave, the disbursements that we were doing, we basically reached the same level now after the third wave of COVID in about June, July last year. And then since then, we've grown 7 times in monthly disbursement. Our loan book has also grown by about 5 times in the last 1 year. Our distribution footprint, that is the number of locations that we were present in, was about 30 about 12 months back, and today we are present in over 300 locations. We are spread across 18 states now, and we wish to be present in all the states in the coming months. We've now built partnership on the three-wheeler side with 7 of the top 10 manufacturers in India now, compared to 2 or 3 that we had about 6 months back. These are some of our big achievements in terms of quality of the book, etc. What we saw was that during COVID, there was a peak in delinquencies, but all of that has subsided now. The delinquencies did not result in real losses to us, and our NPAs are very, very strong, continue to remain for the last 4 years below 1%. In terms of technology, I have 2 sort of large ambitions in technology. One is, as I said, the customer base we operate with they operate in the informal sector, right? And because of that, they live in a predominantly a cash economy. My first sort of desire is to convert them into the digital economy, which means that all the payments that they receive, either as fares or income, etc., should come digitally to them, and then all payments that they make to us and elsewhere should become completely digital. And that's very crucial. And for that, we are going to start working with a lot of different payment companies, etc., and build our own capabilities as well to convert all the customers into the digital economy. So that's one. The second thing is we want to make a lot of investments into the telematics and IoT platform that we've built ourselves. This is extremely crucial because of 2-3 reasons. First, it helps us understand vehicle performance, vehicle technology, to be able to understand what are the best vehicle technologies that we want to work with in future, what brands we want to work with in future. Because we want to work with brands that have products that are long lasting and they deliver on what they promise. The second is that telematics also help us in identifying or improving driver performance. As an example, we know that how much a driver drives in a particular day. We know how much they drive as compared to other drivers in their geographies. And we always encourage drivers to improve on that by displaying information back to them, by showing them comparison and leaderboards to basically try and improve the number of kilometers that they drive, because any improvement in kilometers they drive leads to improvement in their earned capacity. And the third thing is we were also trying to create early warning systems wherein basically we look at both from a driver perspective and vehicle perspective. If the vehicle is not working, not operating, or not roadworthy, how can we improve that? How can we ensure that we give alerts to dealerships, to OEMs, to ensure that the vehicles remain roadworthy? Because if the vehicles remain roadworthy, the drivers will basically be able to earn money, right? So that's why we want to further build on IoT and telematics. So these are sort of the two things we want to focus on. So first of all, I think at a very macro level, I think I'm very bullish on the Indian economy. I think I can see a lot of demand coming, a lot of growth coming. And I believe that this is the best time that India has ever seen in terms of economic potential, economic growth. When it comes to industry, whether we talk about financial services, fintech, or electric vehicles, again, all of those are booming at the moment. A lot of activity happening, a lot of demand increase is happening. And I'm very happy that we are at the intersection of both fintech as well as electric vehicles. From an EV perspective, I think 2022 is going to be the year where there's going to be a very, very large scale adoption of electric vehicles in India across two-wheelers, three-wheelers, and also start four-wheeler adoption to an extent. But for two-wheelers and three-wheelers, this is going to be the best year that India has ever seen. And this will be, I think, a landmark year for adoption of electric vehicles. So in that sense, I also expect that a lot of that growth that comes in the EV sector will also help us grow significantly as a business.
For more updates from CXO TV, please like and subscribe to our channel.